show is Manoj Varma. He's the CEO of Bikaji Foods, and Rishabh Jain, the CFO of the firm. Good morning, both of you. Thank you very much for joining us on ET Now.
Thank you. Good morning.
Right, so Mr. Varma, if I could start with you first. Now, despite the healthy volume growth, gross margins remained under pressure. How do you expect the raw material basket really to evolve as we go further in FY27?
So if we look at gross margin, there's improvement. So it's an upward movement in the gross margin. It's about the EBITDA, which slipped a little bit. And that's on account of the planned marketing investment, what we did in quarter 1, so as to reap the base benefits in the quarter.
All right. Rishabh, if I could just come to you because, the pricing action, we sense that that's already been undertaken so far. How much more in the offing and any impact on the margins because of this now?
So we are taking 2 price rise in last 4 months. I think that will be manage the overall portfolio, overall gross margin then. So we will look at because we enter Diwali season, we look at next 3-4 months how this price go. And there will be some pressure. There will be pressure of 50 to 100 basis points, but we'll manage on gross margin efficiency front.
Okay, Mr. Varma, of course, Diwali season is going to be something that you will be looking forward to. But the mix continues to shift towards focus markets and Western snacks. So how should we think about the long-term margin profile of these businesses relative to your traditional ethnic snacks portfolio?
So our gross margin in Western snacks versus ethnic is not so much different. It's largely same. So we'll manage same gross margin. That's what an improvement will be done at both ends in ethnic snacks as well as traditional snacks. As we are entering Diwali season, we are looking good Diwali season. We are seeing some good demand from all modern trades and everywhere. So in sweets also our gross margin is reasonably good. So we'll looking into expansion in gross margin compared to this quarter.
All right, Mr. Varma, what strategic benefits do you expect from the Nepal JV and when do you anticipate it becoming operational and earnings accretive?
So I think it will take almost about a year to start to get commission. The simple benefit what we'll get is in terms of the import duty there in Nepal is extremely high, which takes away the competitive strength of ours there. So once we produce there, we will be able to compete with the ones who are producing there, the Indian brands and also the local brands there. So I think that's what will unleash our growth opportunity in this market.
Right, Mr. Varma, this one's for you as well now. Distribution expansion has remained strong. Going forward, will growth be driven more by deeper penetration into the existing markets, or do you think expansion into newer geographies is something that you're looking at?
So it's a mix of both. So in the markets where we already have reasonably good reach, that's where the growth driver would be throughput per store, the category expansion, the deeper penetration there in itself within the store. Whereas in the focus markets or the other markets where our reach in itself is not up to the mark, there the larger driver would be the new store growth. So it is therefore the mix of both these stuff.
Right. Rishabh, now as the biggest trigger now will be the festive season, just wanted to understand a demand trend if we have to understand the urban as well as the rural markets so far. How confident are you on a double-digit revenue growth just basis on this festive season?
So we are looking at good festive season as of now. So June and July has been very good for us as we're entering Rakhi this month and Diwali. So we're looking at good 15 to 17% growth. That's what figures comes our sales team and all team is wanted to.
All right. Rishabh, a quick word also on the PLI front and how can you aid business for the rest of FY27?
So overall from PLI front, this government has been very supportive on this and we got PLI last year and this year will be the last year where we get PLI. So this year we'll get complete PLI and we got close to 261 crore rupees of fund in overall 260 subsidy from government. And that's how, and from demand front, so we see good demand overall for the year. We are targeting close to 15% plus growth in this year.
Mr. Varma, exports have underperformed despite investments in overseas expansion. What strategy is at play to improve the competitiveness and scalability of the international business?
So I think it's not about the competitive pressure. It was the few external pressures such as some uncertainty in U.S. markets with the tax structure changing and all that stuff. That's one. Second, with the Gulf War, crude prices went up the roof. So the freight charges have almost gone 2 to 3 times. I mean, those were the factors wherein there was a little bit a negative sentiments and people were differing in this stuff. But otherwise, in terms of demand, product, and all that stuff, rest all falls in place. It's matter of time, should get resolved, and we'll be back on track for what we have said.
Right, Mr. Varma, anything that you have in terms of store additions, really, are you looking to expand further in terms of opening those?
So, is that the general trade you're talking of? Or you're talking of the retail stuff?
The
Stores?
retail, the retail. I'm
Hello?
talking about the retail.
Yeah. So retail stores, if we talk about our FMCG business, we would be adding 50,000 stores by till the end of this financial year. 17,000 have already got added, and the rest will happen. So we'll cross 400,000 direct reach in our FMCG business. In our the QSR format, we would add about 10 stores by end of the year more.
Mr. Varma, if we could just understand the revenue contributions from QSR and others, same store sales growth, how are you looking at expanding now in the next, in the coming quarters, and also in terms of product innovation and maybe offering more, since you mentioned that there's festive season on the anvil and that's a bigger time for you also. Anything planned?
So from QSR front, retail front, it's contributing close to 4.5% to overall business. Like THF, where we invested, so they will do close to 160, 170 crore top line this year, and from our business close to 40 crore rupees. So that's what the overall 4 to 5% overall mix of retail to us. And from new product NPD, that's a regular progression for us as a business, and we target at least 1.5, 2% of top line addition by NPD every year.
Rishabh, if I can take one more question, how is the shift towards optimizing supply chains via the UAE subsidiary significantly? Is it reducing your logistics cost, improving margins for exports to GCC countries?
So it's too early. Largely, the plan is to, as UAE is a very big market for us, and we are targeting that target UAE. Manufacturing will be easily solvable, and we can target big market there in UAE. That's a target.
All right, now we have, of course, talked about the pricing action, but anything that you are looking at in the near future, Mr. Varma?
So not for now, as Rishabh just now spoke, that we've taken a couple of price increase, which would suffice meeting or bridging the inflation, what we have witnessed. And also the Diwali season is round the corner now. There are, already we have booked orders and all that advanced booking. So that would jeopardize our business and commitments what we have made. So at least till Diwali we'll not do, and we have already built in that the increase what we have taken.
Mr. Varma, we have already spoken about the Nepal JV, but I still wanted to understand, if you could elaborate on the geopolitical risk associated with establishing manufacturing operations in Nepal, and also how does all of this, the partnership with CG Savory Corp mitigate these risks also? If you could just elaborate on this.
So, see, it's not that only for, let me pick the geopolitical stuff. So it's not just Bikaji which is venturing into this. There are many other companies which already do this stuff. So it's a stable business for that reason. In terms of our JV with CG Foods, so there is the all legal, all statutory compliance. The agreements are well, drafted, well noted, so as to avoid any ambiguity going forward. So that's what it is. In terms of our business, as we liberate ourselves in terms of increasing our distribution reach within the market and using CG's distribution network. So we feel that it should be a win-win both for the CG and Bikaji as a company.
All right. With that, thank you so much, Mr. Varma, Mr. Jain, for being with us and answering all the questions. Thank you.
Thank you.
Thank you.